Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay guys, what is going on? Welcome to another video. This one we are going to be going over NUSI, NUSI, and why I just have this up here, this down market, and that's because everybody's talking about another crash because of the housing market and so on and so forth. So I thought this was just something that's extra, something we just want to go on ahead and get into this here. Is NUSI, which is the ETF series solution brought to you by Nationwide Risk Management Income ETF. Now, when you say risk management, you're probably thinking, well, shouldn't everybody have some sort of risk management? And yes, they 100% do. The best way to describe this one, though, is it's kind of like the QYLD video that I did where they sell or they do covered calls in order to produce that income, and they pay that out in a dividend every single month. And we're going to go over this, and you guys can see this is NUSI. It trades for about $28.80 where it closed on Friday, and then they've been doing it about 16, 17, 18 cents per month during the recovery and everything. So it's actually done pretty decently since the recovery in 2020. So yeah, you can see it did go down a little bit. And it probably didn't move a ton here, so we can get an actual chart. But I'm going to analyze and everything. We're going to go over this. But it's an income generating fund, guys. This isn't going to be QQQ. It's not going to be SPY, which is the S&P 500, the NASDAQ, or the Dow, or anything like that. It's not going to do as well in an upside market. Just so you guys know, if you're looking for that huge run that the S&P 500 or the NASDAQ does, you're not going to get that. But what you are going to get is the downside from the huge protection. When you get days where you have giant red days, and I mean, this is something that I know as a trader and as an investor, I hate these giant red days, but then again, I like them because I get to buy more of those more stocks that are more rapid growth stocks. Now again, you guys got to remember, I'm big into dividend investing. Again, this is a monthly dividend stock, so it's going to pay you every single month, and that compounding is going to speed up a little bit, so that always helps. Now, when I say that, NUSI is made to literally have downside protection. Unlike QYLD or RYLD or any of those ones that we talked about in the last video, this one is not only going to sell those, but it's also going to have a put option purchased to hedge the downside risk on a stock. So no matter what it's basically got a max income on the upside. So even if the NASDAQ absolutely takes off running, you're always going to have limited upside on that as well, but you're also going to have limited downside, which is also something great that not a lot of people think about. They always think about the upside. You guys got to remember, when markets crash and things like that, you absolutely have to be able to take care of yourself, and that's something where I think this has a spot in my portfolio, and I'm going to start adding into this one personally because I like having that downside protection. PTY, of course, you guys know, and I'll show you guys in the comparison. NUSI is a newer fund, so we can't do 100% numbers like we have been able to back test in the past, but we can go kind of 1 year, and this will kind of show you here some of the others that they've been looking into. And this goes over more of a completely traditional of 60-40 allocation. So of course they're long. So basically the first step is they're buying shares of, I think it's the NASDAQ on this one, if I'm not mistaken. See here. Yeah, they buy it on the NASDAQ or QQQ, whichever one you want to choose there. And then they sell a call, and they also buy a put option, which again limits. They're also generating income and limiting their downside completely. So anybody can do this, but this is just an easier way to be able to generate income and not have to do it yourself. So we're going to look at this SPY, which is the blue line, PTY, which is the red line, and then NUSI, which is the yellow line. And you're going to see when the market takes a dip, NUSI actually does better and just kind of stays consistently because it's got that downside risk management, which is always good. You're going to keep getting that dividend and everything. And then when the market actually heats back up, like here lately, we've been at all-time highs. Now, it's not going to do what SPY and other ones are doing. And PTY is doing absolutely great for what it's actually made for. If you guys go back and watch that video, I've done a video on that. But again, NUSI is going to keep making you money no matter what. It's probably about an 8.5% gainer a year with that compounding money going as well. So you may not get as much initial capital going up from your actual stock, but you're going to get those dividends coming in absolutely every single month, and that's going to make the world of difference overall. So I do think PTY and NUSI are probably my top two, and again, I like the NUSI because I want to have downside protection, guys. Yes, everybody wants to have that upside and everything, but you also want to make sure when the stock market crash does come, guys, and there's a million other pictures of these on here, that you have to make sure that you have what it's going to take to be able to hold through. And NUSI is one of those things where it's probably just going to stay stagnant and trade within a range and then be able to go from there. So one other thing I want to do here is look at the chart here on a max level. And this is something I think everybody should do, is that, yes, it can dip, but it's not trading in a huge range. So anywhere between 24 to 28, yes, that is a significant range to some people. But you know what? Honestly, if I'm only making $2 per share, but my minimum is losing, say we buy at 26, my drawdown's $2 a share, and my upside's $2 a share, and it could be further up if the market keeps going up because it's going to keep making money. Plus, I'm going to get my dividends every single month. That is actually okay, and I'm not mad about that. And this is, again, if you guys ever use Google, they have the finance section where you can go and you can compare things. Again, portfolio visualizer is what I like to use. And then we're going to come down here to, these are annual returns, but let's go into the income. Guys, again, I am a big income investor, not just overall growth. I want to keep growing my income every single month. I don't care if you are a starter and you only put a couple $100 in every month into one of these just to grow your income. Maybe a couple dollars is going to add up drastically as long as you guys are starting early. It doesn't matter if you're 40, 50, 60 years old. As long as you just keep piling money into it, guys, it's going to keep compounding, and that's probably the best thing. Or if you have a chunk of money that you can put into one of these, you're going to get paid no matter what, basically. So PTY, again, you made $412 this past or so far this year, and then on NUSI you would have made $356, which is the orange one, and then SPY, which is $59, which is absolutely horrible when it comes down to this. But again, you guys can look at this as well. So it's not too far off of the dividend, and you're limiting your downside risk. Because remember, if we look at PTY, when it comes down into here, PTY did fall pretty hard when it came down to when the market basically took a gigantic plunge in 2020. Now, that was a 100% reason for me to buy more PTY, and I'm glad I did because it's done great. And again, I think PTY is still my number one fund that I will continue to buy every single week of my life. But NUSI is going to be one of those now that I am adding to my portfolio in order to create another stable source of income. With that being said, guys, thank you guys all for watching this video. Do more of your own research, and I look forward to seeing you guys in another video.